Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 4th of June 2019, so welcome everyone. Welcome to this Tuesday afternoon session where we're going to have a look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, so now then, let's quickly jump into the charts. Now the first one I want to touch on here is quickly the DAX30. So the German index is having a great day today. It's pushing higher. Now I looked at the German DAX here earlier, and basically what I was saying, that if this level here around the 11,850 zone, if it holds, then we may see maybe another leg of selling here, potentially driving this one back towards the lowest point here of yesterday near the 11,620 zone. So but as you can see, that the index never kind of managed to break this level here, the 11,850 level, quite comfortably, and actually closed the 4-hour candle above it, and also closed above this 200 EMA here on the 4-hour chart. And as you can see also, that the index continues to travel higher. Now of course, this such a great move here that we're seeing, maybe this is the market reacting to the good progress in the U.S. and Mexico negotiations, where as you know, United States decided to threatened to impose tariffs on Mexican goods. So today we're getting some good responses from there, good results. It seems that they're willing to talk. The U.S. side is willing to talk, so that's why maybe the equity markets are reacting to this in a positive way. And as you can see now, it's pushing higher. The only thing is that here, looking at the DAX, in a way, yes, it could potentially travel a little bit higher. The only thing is, as you can see by the arrow, this is the level that we're waiting for. We need to see a nice good push above the 12,175 zone, approximately there, before we could examine the upside, just because this would place the index back above this upside support line taken from the lows of the 27th of December, and this way, yep, we could potentially target the highs that we saw here in the first days of May, and this was around the 12,435 zone, approximately there. So yep, good potential target, but then again, like I said, we'll only consider further upside if we see a nice good break, and ideally a close above the 12,175 zone. So keep your eyes on this one here. This territory for us is still somewhat of a neutral one. If this suddenly decides to drop back below the 11,850 zone, now this is where it could turn out to be ugly again for DAX. We could see this one sliding lower. Initially, we will target this 11,720 area, but the main target for us will be around here, around this little low that we saw here yesterday near the 11,620. So for now, the upside, the downside is slightly off the table, but then again, like I said, we still have the full well, we still have some hours left until the German market closes, so keep your eyes on this one. But of course, most likely we may see this one staying above here, above the 200 EMA, above the 11,850, and then it will be very interesting to see how this performs tomorrow. And there is a good likelihood that we may see a continuation here to the upside, at least up until this upside support line, to test it from underneath, and then we'll take it from there. As I said, we need to see a nice good clear break, and ideally a close above the 12,175 before examining further higher levels. Jumping into silver, I've talked about this one recently, and basically what I was saying that keep your eyes on this level right here, the 14.83, and look, we had a fantastic test yesterday of that area, and the commodity retraced and is currently balancing just slightly above this its 200 EMA here on the 4-hour chart. Now it did travel lower initially. It managed to test again this area of support, which previously acted as a good area of resistance. As you can see, this 14.65 level acted as a fantastic area of support and rebounded and allowed the commodity, the precious metal, to rebound back above its 200 EMA. For now, we are more positive than negative on this one, but let's say ideally we would like to see, now just for that better confirmation, ideally we would like to see a nice good push above this 14.83 level. This way the precious metal would confirm a forthcoming higher high, and we could then target the 14.97 or even the slightly above that, the psychological 15 level. So for now we're just going to go step by step, very carefully. Let's see how this is going to play out. Like I said, we are more bullish than bearish on this one, but just for that better confirmation, I ideally would like to see a nice good break and a close above the 14.83 zone. In terms of the downside, if this decides to drop below this downside resistance line taken from the highs of of March here, or to be more specific, the high of the 21st of March, if this precious metal, if silver drops below that this downside resistance line and then breaks below the 14.48 level, which previously acted as a good area, a temporary area of resistance and also temporary area of support, if we see a drop below this, then this could turn out to be ugly for silver, and we could see maybe another revisit of the May lows, which were around the 14.27 zone, 27.28 approximately there. So the lowest point of May could be revisited if we see a sharp drop below the 14.48 area. So keep your eyes on this one. Jumping into a few pairs now very quickly. So just to see what's happening with the euro. Now I talked about this one this morning, and I was telling you guys to keep a close eye on this this 1.1260 barrier, this level here, because even though we did have a nice break here, we needed that nice good close, at least of the 4-hour candle above that, above this level, in order to kind of consider further moves higher. As you can see, that it failed to do that. Yes, it did travel higher. It almost managed to reach our other somewhat important area of resistance near the 1.1280. It kind of never did reach that area, and you can see that it reversed back down. It traveled lower, so now it's kind of trying to make its way to the downside, closer towards the pivot. Now if it continues to slide, what we're going to target here is of course this 1.1215 area. Now this 1.1215 area played a very key role here, and back on the 27th of May it acted as a very good area of resistance. So this time it could take the role of a good support zone. So keep your eyes on this one. In a way, if it continues to hold, let's say, then we may see a nice rebound and a push back up. But if it starts failing this and we see the pair dropping below this little downside resistance line taken from the high of the highest point of January, let's put it that way, and if we see also a drop below this 1.1190, now this is where it could turn out to be ugly for euro dollar. We could see further declines. Also, just to kind of also point out that don't forget that the pair is currently trading within this nice range here, roughly between the 1.1110 on the downside and the 1.1260 on the upside. And today we did have that nice, like I said, break above the upper bound of this range, but it failed to close above it. And now we're seeing this perfect slide. Again, first, like I said, we will be targeting the 1.1215, and then we'll take it from there, see if it wants to if it wants to stay here, if it does want to stay above it, then well, we could see another push higher, maybe another test of this upper side of the range. But if it starts breaking the 1.1215 and eventually drops and closes below the 1.1190, now this is where the upside probably could be slightly off the table, at least from the very short term perspective. And like I said, we could target again the lower side of this range near the 1.1110. Jumping into GBPAUD now, I talked about this one in one of my previous videos, where I was telling you guys to keep a close eye on this potential falling wedge formation. So as you can see, it continues to play out nicely. So it balances. It did try a few times to break to the downside, but never kind of closed the 4-hour candle below it. So what we're going to do here is, of course, we're going to keep a close eye on it. These types of formations tend to, of course, according to textbooks, these types of formations tend to break to the upside. So for now, what we're going to do is we're going to wait until we see a clear break above this upper side of this falling wedge formation. But ideally, what we're looking here for is at least of a close of the 4-hour candle above it. This would of course also could place the pair above the 1.8195 level, good potential area of resistance, previously acted as support as well. So but even then, we're going to keep it very short and simple. We will target slightly higher levels. Our next target could be around the 1.83 zone, but if that fails to hold, now this is where it could become a little bit more exciting for the bulls. We could see further moves higher, potentially aiming for the levels that we're seeing around mid-May. So for now, be very careful. Initially, keep your eyes on the 1.8195. In a way, you could round it up towards the 1.82, just for the sake of it. But still, keep your eyes on that territory. If we do get a nice push above that level, this could also, like I said, this would also place the pair outside of this falling wedge formation, and in a way, we could maybe target some slightly higher levels. For now, it's still here. We do not exclude the possibility of seeing false breakouts here, so we need to see that nice good close of the 4-hour candle above this before we could aim for higher levels. In terms of the downside, still for us, the level here, the 1.8095 level, that's the one to watch in order to consider further declines. And if we do see a drop below the 1.8095, this could open the path towards the psychological 180 zone, and the just a level slightly below that, the 1.7990. So just to kind of show you what I'm talking about here, so the 1.8095 has been a very good low here back on the 17th of April, and also around the was marked around the 20th of February. So so that's why we're keeping a close eye on this level. So we need to see a nice good drop below this. If we do see a break below this level, and ideally a close below that level, then yep, it would confirm a forthcoming lower low, and we could then target the area around the psychological 180 or the 1.7990, which acted as a very strong area of support, sorry, back here on the 14th and the 15th of February. So keep your eyes on this one, guys. A few more pairs very quickly. So USDJPY is having a nice push here higher. Of course, that's in a way understandable, because the equity markets are pushing to the upside. So back to risk on environment, and this is where the yen is losing its ground, and you can see that USDJPY is recovering. It's trying to at least recover. Managed to push above its pivot here today's pivot, which is roughly around the 108.13. But still, do be very careful. Now, I do have my arrow here shown as this way, so in a way, what we're going to look out here for is the 108.50. If it struggles to push above the 108.50, to be honest, we may see another leg of selling here. So basically, we could see this risk-on environment kind of short-lived, and we could see the pair coming back down again. So, but for now, of course, it is trying to push higher. Let's see how it performs around the 108.50 level. If it pushes further up, that's great news for the bulls. We could maybe then target the 109 zone, but this is going to be for us the more important one, the 109 area. we're going to be looking for that one. If we see a push above this, then yep, that could be good news. We could see maybe this one traveling a little bit higher. Of course, some of you, if you already spotted something here, then like for example this little tentative downside resistance line taken from the high here of the 21st of May, this line here as well could play out nicely. So this could be that last resort for the bears to step in and potentially drive this one lower. But if that fails to withhold, well, I mean, this could be opening the path towards slightly higher levels, maybe going back towards the psychological 110 zone or even above that. But for now, let's not over speculate on this one too much. First, let's target the 108.50. Let's see how it performs around there. If it wants to push further up, then that's good news. We could see this one correcting a little bit more, maybe towards the 109 zone, and then we'll take it from there, see how it performs around that level. And the last pair I wanted to quickly touch on before I run out of time, and that's USDCAD. So I've talked about this one a few times in my past videos here, and basically I was telling you guys to keep a close eye on this level here. Initially the 1.35, so we broke it to the downside. It traveled lower, but managed to also break this 1.3450, which I've kind of referenced a lot of times. And you can see that it today traveled lower. It tested the 1.3424 area. But as you can see, it struggles to close the 4-hour candle below that. Of course, we still have plenty of time to to trade here today, so anything could happen. We could see this one sliding further down. If we see a close of the 4-hour candle below the 1.3424, well, brace yourselves. We could see this one traveling further down towards the lower side of this range that the pair was trading in previously, and this lower side of the range is roughly around the 1.3370 zone. So in a way, if I put my arrow here a little bit, this is basically what could happen. So in a way, what we're looking here for is a nice good 4-hour candle close below the 1.3424. This could increase the chances, like I said, could increase the chances for this one to slide further down towards the lower side of the of this range at 1.3370. And also just to kind of so that's something for you to keep in mind, and this is basically this upside support line, or in other words actually upwards moving trend line taken from the lows of the 1st of February here. This upwards moving trend line has been running here from the 1st of February 2018, so also good potential support zone, but first of course we would need to see this one breaking below the lower side of this range, and this is where it could be interesting to see what it would do with this upside support line. Would it just rebound again and push higher, or will it this time be the lucky time for the bears, and we could see this one breaking and pushing to the downside. So for now, long story short guys, keep your eyes on the 1.3424. A nice good close below this could lead towards further declines, but if this decides to reverse and pushes back above the 1.3450, now in a way there could be a chance to see a revisit of the 1.35 level again. If we see a push towards that area, then this is going to be very interesting to see actually. Will it push further up here, or actually this is going to be the one that's going to hold again and we'll see another leg of selling. But for now, let's not, like I said, let's not complicate our lives. First, let's keep an eye on the 1.3450 on the upside, and on the downside the 1.3424. So keep your eyes on this one. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end, and if you want to join me tomorrow morning for another quick overview of the a few of the instruments, I'll keep some of these as well, and I'll add some new ones to the list. So I hope you have a wonderful evening guys. I'll see you later. Bye bye.